Hello everyone. Corporate accounting under that valuation of shares. So this is Dr. P. Kumarasamy, Assistant Professor, Department of Commerce, UG, Kristu Jayanti College, Autonomous, Bangalore, Karnataka. Valuation of shares. What is the meaning of share? The capital of the company is divided into units. Every unit is called single unit of share. So total number of shares are categorized as equity shares and preference shares. The reason for issue of equity shares are to generate resources to the company. So shares are available to the public and shares are non-redeemable. Benefit of shareholders, they are getting voting power of the company. They are considered as a owner. So ownership is transferred whenever they want to sell their equity shares to others. Then they are getting rights to get a bonus shares when the company having profit more than or more profit. Then equity shareholders are having more voting power. They are having power to claim the assets. The high risk and the high reward method. Right shares are given to the equity shareholders. In case if you take the preference shares are categorized as participating and non-participating preference shares, convertible, non-convertible preference shares, redeemable, non-redeemable preference shares, then cumulative and non-cumulative preference shares. So these are the categorization of preference shares. So reason for issue of preference shares are to generate sources to the company, and preference shares are available to the public. Preference shares are categorized as redeemable and non-redeemable. Benefits of preference shares are a right to get a dividend before the equity shareholders. The preference shares are having it's not having voting power. Preference shareholders are getting priority to claim assets in the winding up. Then preference shareholders gets fixed dividend. Preference shareholders are owners of the company, but they don't have voting power when we are comparing with the equity shareholders. So when we compare with the equity shareholders, preference shares are having less risk. About the preference shares, determining the value of business by estimating the value of its shares, understanding the real worth of its shares before investing. We can calculate the intrinsic value of the shares. The process of calculating the intrinsic value is known as share valuation. Need for valuation of shares in case of amalgamation or absorption of companies. When the block of shares are purchased or sold, when one class of share is converted into other class, in case of nationalization of companies, when shares are sold in the absence of stock exchange, when the investment of a company is sold. Factors for valuation of shares, these are the factors given one by one. Nature of the business. Number 2, stability of earning in the company. Number 3, earning capacity of the company. Number 4, capacity of management. Number 5, demand and supply of shares. Number 6, economic and political conditions of the company. 7, nature of a competition. 8, value of goodwill of the company. 9, progress of the company. These are the factors that we have for valuation of shares. Methods of valuation of shares. We are following the three methods: net assets method, intrinsic method. Net assets are intrinsic value method. Number two, yield method. Number three, earning capacity method. So method of valuation, here we are taking first one, intrinsic value or net assets method. So under the intrinsic value or net assets method, first one is we should calculate the market value of assets in the company. Then we should deduct the calculated total assets of the company in the market value. Right, with the total liability. So total market value of assets in the company minus the total liability. So after deducting the liability value from the total assets in market value, we are getting net assets. That calculated net assets value will be taken and divided by number of equity shares. We are getting intrinsic value per share. Here market value only will be taken. Preliminary expenses, a discount on debenture, profit and loss account in asset side will not be considered as assets. Depreciation fund is a liability. Number two, yield method. To calculate value per share under yield method, we should follow these given steps. Step number one, calculate average profit. Step number two, calculate a profit available for dividend. Step number three, calculate profit available to the equity dividend by deducting the dividend to the preference shares. Number four, calculate expected rate of return. Number five, yield value of equity share. Finally, fair value per share is calculated by adding value under the intrinsic method with the value under yield method divided by 2. Number two, yield method. To calculate the value per share under yield method, we should follow these steps. Step number one, calculate average profit. Step number two, profit available to the shareholders. Step number three, profit available to give dividend only to the equity shareholders. Step number four, calculate capitalized profit. Number five, yield value of equity shares. Here, earning capacity method is the third method. We are following these steps to calculate the value per share under earning capacity method. Step number one, rate of calculation of rate of earnings. Step number two, calculate market value per share. Step number three, profit available to the equity dividend by deducting the dividend to the preference shares. Step number four, calculate capitalized profit. Step number five, yield value of equity shares. The problem given. In the given problem, we are taking liability and assets in the balance sheet. So in asset side, fixed assets, current assets will be taken. Then preliminary expenses, discount on issue of debentures, profit and loss account. These list of items given in asset side will not be taken as assets. So only we are going to take a fixed asset and current assets after checking the additional information given under the balance sheet. Then in liability side, preference share capital, equity share capital, then debenture redemption fund, 6% debentures, depreciation fund, sundry creditors. These are the items given in liability side. Now we can take additional information. Debenture interest is due for 1 year. Then doubtful debts on debtors rupees 12,000. These are two additional information details are given. So debenture interest is due for 1 year will be taken as a liability. Another one, 12,000 is a doubtful debts that will be deducted from the current assets, because the current assets includes cash, bank balance, stock, debtors. So debtors also included in current assets. So we are taking 12,000 and deducting from the current assets. Now we can go for calculation. Fixed assets and current assets will be taken 4 lakhs plus 2,50,000. So from 2,50,000 we should deduct 12,000 balance 4 lakh 1 lakh 30,000. So totally how much the value? So 2 lakh current assets 2,50,000 minus doubtful debts 12,000, balance 2,38,000. So total assets value. In additional information they have not given the market value. So book value is taken as a market value. So total market value of assets in the company is 6,38,000. So liability we should take 6% debentures given in balance sheet of rupees 1 lakh. Depreciation fund given in balance sheet and liability side 1 lakh. Sundry creditors details given 70,000. Interest on debenture due for 1 year, that is given in additional information for 6% on 1 lakh is 6,000. So sundry creditors, it's given in second time, we no need when we are aggregating the amount. Total aggregated amount is 2,76,000. That will be taken to deduct from total market value of assets of the company. So balance 3,62,000 is net assets available for shareholders, including preference shareholders. Now we are deducting the preference shareholders amount from the total amount. Rupees 1 lakh will be deducted from 3,62,000. Balance 2,62,000 is net assets available only to the equity shareholders. So total net assets available to the equity shareholders is 2,62,000. That is a final amount. That taken final amount is divided by number of equity shares. Now you will get, what will you get? Now you are getting value per share. So we are calculating value of per share only to the equity shares. So total fund available to the equity shareholders are 2,60,000. That will be divided by number of equity shares, that is 30,000. The amount that you are getting as a result is called value per share. Note, preliminary expenses, discount on debentures and profit and loss account, that is loss, will not be taken as when we are calculating the total assets of the company. Number 2, debenture redemption fund is on accumulated profit. Depreciation fund is a liability. Then when depreciation fund on accumulated depreciation is given in the problem, it indicates that fixed assets are shown in the books at its original cost. Hence, while calculating net assets available to the equity shareholders, we should take these informations into mind. Depreciation fund must be deducted from the total net assets value of the company. So these are the fictitious assets in case given in asset side. that the assets given in asset side are not realizable assets. So fictitious assets that is given in the asset side of the balance sheet of the companies after current assets will not be taken to calculate the total assets of the company in the market value. Thank you.